Hello friends and welcome back to our NMLs question and answers. So today we will be going through questions from 51 to 100. So let's begin. Commission, overtime, bonus and part-time income must be averaged over how many years for considering as income? The answer is 2 years average. Next, consumer debts that have less than how many months of payment remaining do not need to be included for the purpose of populating or calculating debt ratios. The answer is 10 months. However, if it's a lease, the lease is always included irrespective of how many months of payment is left in that lease. Next question. What is a 203B loan? 203B, B for basics. So it's 203B loan refers to the FHA basic 30-year fixed rate loan. So the way you can remember it is B for basic. So it's a FHA basic 30-year fixed rate loan. Next question. What is a 203K loan? 203K is a rehabilitation loan. You can think about that as a K for thousands, so you need thousands of dollars for rehabilitation. So 203K loan is used for rehabilitation. Next is 203G loan. So how you can remember that is G for good. The 203G loan is being used for teachers, firemen and police. So they are all the good people who serve the society, and that's the reason why you can remember it as G for good for teachers, firemen and police. The next question. What is IRS Form 8821? The Form 8821 is the Tax Information Authorization Form. What is 4506 form? It's a request for transcript of tax returns. It's a transcript of tax returns. What is 1003? 1003 is the URLA or the Uniform Residential Loan Application. That's definitely something everyone of us who are the mortgage loan officers should be aware of. What is a 1004 loan? 1004 is the appraisal forms. What is 1005? That's VOE or verification of employment or corporate verification of payroll. It's mostly the eligibility. E for eligibility. How do you define the eligibility? Through your employment. Okay. The next one is, what is 1006? It's for VOD or verification of deposits. What is 1007? That's the rent applications. 1008, that's transmittal application, and 1009 is the reverse mortgage. So in our mortgage application form, 1003 is the Uniform Residential Loan Application, 04 is the appraisal, 05 is the verification of employment, 6 is the verification of deposits, 7 is the rent, 8 is transmittal summary, and 9 is the reverse mortgage. Okay, now let's move on to Form 442. Form 442 is meant for recertification of an appraisal. What are the types of freehold estates? There are three types of freehold estates: fee simple absolute, fee simple defeasible, and life estate. They represent an immovable asset in the real estate industry that you hold interest in. Next one. If a consumer requests cancellation of an escrow account, the lender must deliver an escrow closing notice no later than how many days before the closure of an account? The answer is 3 days. Keep in mind, if the consumer requested the closing, then this notice will be received at least 3 business days before the consumer's escrow account is closed. If it is closed for any other reason, when must the lender deliver an escrow closing notice? The lender is required to provide notice no later than 30 days. How long do you have to retain the TILA disclosure? It's 2 years. How long do you have to retain the DNC or the do not call list? It's 2 years. How long do you have to retain the MAP or the Mortgage Act and Practice disclosures? It's 2 years. How long do you have to retain the loan estimates? It's 3 years. How long do you have to retain the LAR or the Loan Application Registry? It's 3 years. How long do you have to retain the LOC? It's 3 years. How long do you have to retain the closing disclosure? It's a whopping 5 years. And how long do you have to retain the SAR, Suspicious Activity Report? It's 5 years. How long do you have to maintain the ECOA, the Equal Credit Opportunity Act? It's 25 months. What is warehouse funding? When the lenders for closing gets the line of credit extended by a commercial bank, it's called a warehouse funding. What is an estoppel letter? Estoppel letter is a letter sent when the closing agent sends a stop letter to the sender's lender requesting a payoff amount. An estoppel letter is most commonly used when a landlord wants to assure cash flow and prevents a tenant from breaking a promise. Now let's move on. Who maintains a flood map? FEMA. FEMA maintains the flood map. What is the minimum and maximum amount of flood insurance needed? It's 100K and 250K. That's the minimum and maximum amount of flood insurance needed. Moving on. What is deed in lieu of foreclosure? Deed in lieu of foreclosure occurs in the mortgage voluntarily conveys that the deed to the lender in exchange for satisfaction of the debt, but still loses the property. But by conveying to file before the court action to avoid foreclosure on the credit record. However, the lenders are not obligated to accept this. What are the 4 types of legal disclosures or legal descriptions for properties? There is a monument method, government land and survey method, lords and block method, and meets and bounds method. Which of these 4 is the most common legal description method? It's the lords and block method, also known as the recorded flat survey or plat survey system or recorded map survey system. It's a method used to describe and identify the location of a parcel of land. The lot and block survey system is often used in densely populated metropolitan and suburban areas. Moving on to the next question, which is the most accurate legal description method? It's the meets and bounds method. What is a CTR? CTR is a currency transaction report. It goes to the IRS. Bank Secrecy Act or BSA and the Anti-Money Laundering Laws AML requires the companies to file a currency transaction report with IRS for cash transactions exceeding 10,000 in one day. The Act requires financial institutions to keep detailed records of cash transactions exceeding 10,000. These transactions can be a withdrawal, a deposit, or transfer. Moving on, who is CTR under? The answer is the Bank Secrecy Act and Anti-Money Laundering or AML. Who is the BSA and AML under? They are all under the USPA or the US Patriotic Act. A company with which a consumer has an established business relationship, EBR, may call for up to how many months? And what about if the consumer only requires or submits an application? If it's an established business, the time period is 18 months, and if it's an inquiry, it's a maximum of 3 months. A transaction need to occur for it to be an EBR, an established business relationship. Let's give an example here. So as a mortgage loan originator, you went into an established business relationship. That means you made a transaction or you got a loan from an entity, and that's called an established business relationship. If that's the case, you can call that customer for a time period of 18 months. However, if there was no transaction and it was just an inquiry, then the maximum time period within which you can have these conversations is 3 months. Moving on. The DNC list must be updated how many days? So who remembers what is a DNC? DNC is the do not call list. Okay, so do not call list must be updated every 31 days. DNC must be retained for how long? It should be retained for 2 years. Fellow members, we need to remember these acronyms. DNC. In the exams, you won't know that it's do not call. So you need to remember that what does DNC stand for? DNC stands for do not call. And it must be retained for 2 years. Let's move on. What is the penalty for sending unauthorized faxes? It's $500 per fax. What is MARS? MARS is the regulation O. It stands for Mortgage Assistant Relief Services. An easy way to remember that is MARO, and its regulation O. MARS help to protect distressed homeowners from foreclosures, preventing scams. MARS forbid collecting fees unless what? MARS forbid from collecting upfront fees unless there is a written agreement like with the servicer. What does MARS prohibit? MARS prohibit negotiating the interfering with communication between the borrower and lender. Secondly, it cannot tell the borrower to stop paying their mortgage. Let's move on to 96th question. The lender have how many days after closing to refund the borrower a portion of the charges that exceeds the acceptable amount of tolerance level? They have 60 business days, and within which the lender have to refund the borrower the portion that exceeds the tolerance level. How about if this was caused because of a clerical error? So if it was a clerical error, you have only 60 calendar days to refund the borrower's money. Moving on to question number 98. TILA was implemented by who? TILA was implemented by the Federal Reserve Board. Who administers TILA? CFPB, Consumer Financial Protection Bureau. And our last question for today, what is loan flipping? Loan flipping is an abusive practice in which a loan is refinanced without any changeable net benefit to the borrower. It's a form of equity stripping. Hope you all loved this video and found this useful. If so, please don't forget to share your valuable comments. And if you're looking for the study notes as a book and as a digital download, please look into the description. Thank you.